Ever wish you could just, get the real story behind a company's finances quickly without wading through pages and pages?
Yeah, like cutting through the jargon.
Exactly. That's what we try to do here on the deep dive. We take the key documents, pull them apart, and find the stuff that actually matters.
And today, we're diving into Pidilite Industries Ltd. Specifically, their audited results for the financial year ending March 31st, 2025.
Yeah, we've got the whole package, the official filings they sent to the stock exchanges, the standalone numbers, the consolidated group figures.
And crucially, the independent auditor's reports on all of that.
Our mission basically is to give you the highlights, how they did, the big decisions they took, what the auditors thought, all the important bits, minus the headache.
Okay, so where do we start? The initial announcement itself is probably the place.
Sounds good.
So, the board of directors for Pidilite, they met back on May 8th, 2025.
Right.
And their main job that day was to formally approve these audited financials we're talking about, both standalone and consolidated for the year that just ended.
And this is all part of the regular process, right? Following the SEBI regulations.
Exactly. It's under the SEBI listing obligations and disclosure requirements, the LODR regulations from 2015. It's about keeping investors informed.
Got it.
Yeah.
So they approved the results. What else came out of that meeting? Did they release the documents then?
Yes, they enclose the whole set, the detailed standalone and consolidated results, which include, segment performance, balance sheets, cash flow, the works.
And the auditor's reports, too.
And the auditor's reports, yes,
Yeah.
both for standalone and consolidated.
Now, you mentioned the auditors. What was their verdict? Was it straightforward?
Pretty much, yeah. The auditors, Mrs. B.S. R. & Co., LLP, issued what's called an unmodified opinion.
Unmodified. That sounds good.
It is good. It's basically a clean bill of health. It means the auditors are saying, yep, in our view, these financial statements give a true and fair picture.
Okay, that's a key takeaway right there. Anything else major from the board meeting?
Oh, definitely. For shareholders, this is a big one. The board recommended a dividend.
Ah, okay.
Yeah.
How much?
Rs 20 per equity share. That's on shares with a face value of Re1.
20 rupees. That's quite substantial.
It is. Now, it still needs shareholder approval at the annual general meeting, the 56th AGM.
Standard procedure.
Right. And if approved, they've said it'll be paid out within 30 days of the AGM. So they seem confident.
Sharing the success, as you'd hope, gives you a sense of the scale, too. How long did this board meeting even last?
Well, the times listed are 12:30 p.m. to 6:20 p.m. on that day, May 8th.
Wow, okay, so nearly 6 hours. They weren't just rushing through it.
No, clearly a lot to discuss and approve. It suggests, proper due diligence.
All right, let's get into the numbers then, and maybe start with the standalone results. Just Pidilite itself, not the whole group yet.
Sure. So looking at just Pidilite Industries, the main company, the revenue from operations for the year ending March 2025, it came in at Rs half 126,072.7 crores.
Okay, 2072 crores. How does that compare to the year before?
It's a decent jump. The previous year was RHAS 11,166.97 crores. So definite growth there.
And can we see where that growth came from, like the different parts of their business?
Yeah, they break it down by segment. The big one, consumer and bazaar, think Fevicol, Fevikwik, Dr. Fixit, all those brands you see in stores.
The stuff most people know them for.
Exactly. That segment brought in Rs 965.92 crores. That's up from about 9,262 crores the year before.
So strong performance in their core retail market. What about the other segments?
Then there's business to business, or B2B. This is more industrial stuff. Adhesives for factories, synthetic resins, construction chemicals sold to large users.
Right.
That also grew. It hit Rs 2590.05 crores, up from around 272.56 crores. So growth on the industrial side too.
Okay, good to see growth in both major areas. Was there anything else?
There's a small other segment, mostly selling raw materials, it seems. That was slightly down. Actually, Rs 55.73 crores compared to about 61 crores.
Interesting. Maybe just fluctuations in raw material sales or something.
No.
So overall revenue up, how did that translate to profit?
Good question. The standalone profit before tax, or BBT, also rose nicely. It was Rs 2765.88 crores for the year.
And the previous year?
That was Rs 204.3.81 crores. So the increased revenue definitely flowed through to the bottom line before taxes anyway.
Okay. Now, sometimes you see these exceptional items messing with the profit numbers. Were there any of those for Pidilite standalone?
Yes, there were a couple noted for this year. Think of these as like unusual one-off things not related to the main day-to-day business.
Right. So what were they?
First, an impairment loss of Rs 17.32 crores.
Yeah.
This was on a loan they'd given to an associate company.
Impairment meaning they don't expect to get it all back.
Essentially, yeah.
Yeah.
They've had to acknowledge that the value of that loan has dropped. Yeah. The second item was a net expense of Rs 2.84 crores.
Okay.
This related to some tax claims connected to a business they sold off previously, Pidilite do Brazil. So a lingering cost from that divestment.
Gotcha. So important to note those, but they are separate from the core operating profit.
Precisely. It helps you see the underlying performance more clearly.
And that dividend we mentioned, the Rs 20 per share, that applies to these standalone results too.
Yes, the recommendation covers the company as a whole.
Okay. What about earnings per share EPS? That's a number lots of investors watch.
For the standalone entity, the basic EPS for the year ending March 31st, 2025 was Rs 40.77.
And diluted?
Diluted EPS was very close, Rs 40.68. These are solid numbers showing decent profitability per share.
All right, so that's the standalone picture. Healthy growth, better profits, a good dividend proposed, couple of one-off items noted. Now let's zoom out.
To the consolidated view, the whole group.
Exactly. This includes all their subsidiaries and other ventures, right? Even international ones.
Correct. The auditor's report actually lists them out in an annexure subsidiaries, associates, a joint venture.
Yeah.
And yeah, looking at the names, you see operations in places like Egypt, Sri Lanka, Bangladesh, UAE, Tanzania.
USA, Indonesia too, I think.
Yep, USA, Indonesia. It gives you a sense of their wider footprint. So consolidated tells the story of the entire Pidilite family globally.
So what did the total revenue look like for the whole group?
Consolidated revenue from operations for the year hit Rs 340.31 crores.
Okay, over 13,000 crores. How does that stack up against the previous year?
Also showing growth. It was Rs 123.82.99 crores before. So the group overall is expanding its top line.
And the segment performance? Did the consumer and B2B split look similar at the group level?
Broadly, yes. Consolidated consumer and bazaar revenue was Rs 103.91.53 crores, up from about 957 crores.
Still the biggest chunk.
By far. And business to business on a consolidated basis reached Rs 195.21 crores, up from around 2638 crores.
So both key segments growing at the group level too, and others?
Others was pretty stable. Rs 56.82 crores this year versus 61 crores last year, similar to the standalone.
Okay, so consistent growth picture. What about consolidated profit before tax?
That also showed a healthy increase. The group PBT was Rs 222.70 crores, compared to Rs 2379.35 crores in the previous year. So again, revenue growth seems to be driving higher profitability for the group overall.
Were there exceptional items at the consolidated level as well? Any differences from the standalone ones?
Yes, similar themes, but slightly different numbers sometimes. There was an impairment loss noted, this time Rs 22.08 crores, on an investment and a loan to an associate. So a bit higher than the standalone impairment.
Okay.
But the other item, that net expense from the Pidilite do Brazil divestment tax claims, was the same, Rs 2.84 crores.
Right. So similar kinds of one-off adjustments affecting the group profit and the dividend. Still, Rs 20 recommended.
Yes, that recommendation applies across the board, pending the shareholder vote.
Now, I remember seeing something about an acquisition in the notes for the consolidated results. That sounds interesting.
Ah, yes. This is quite noteworthy. During the year, one of Pidilite's wholly owned subsidiaries, a company called BMOD Commercial Co., PBT Ltd.
Okay.
They acquired a 100% stake in an MBFC. That's a non-banking financial company.
An NBFC. Which one?
It's called Miss Pargro Investments, PBT Ltd. The deal was for Rs 9.90 crores.
Why would an adhesive company buy an NBFC? What's the strategy there?
Well, the stated aim is pretty interesting. It seems they want to use this NBFC to support Pidilite's own business growth, potentially by offering small-value retail loans.
Loans to whom? Their customers? Or distributors?
The implication seems to be towards their network, maybe smaller dealers or retailers. It could help those partners manage inventory or finances, potentially strengthening Pidilite's distribution chain.
Huh. That's clever, kind of building out their ecosystem.
Exactly. It's a strategic play beyond just selling glue.
Anything else unusual noted in the consolidated results? I think there was something about stock options.
Yes, a fairly minor point, but worth mentioning. They allotted some equity shares under their employee stock option plan, ESOP 2016. It was 1,500 shares in February 2025 and another 1,200 in March 2025.
Just standard employee incentive stuff then.
Pretty much, yeah. Common practice.
Okay, and finally for the consolidated numbers, what about the earnings per share? How did that look for the group?
Consolidated basic EPS for the year was Rs 40.82.
And diluted.
Diluted was Rs 40.73. Again, very close to the standalone figures. It suggests profitability per share is consistent whether you look at the core company or the whole group.
Right. So a very similar story on profitability per share. Okay, let's shift focus a bit to the auditors again. We know they gave that unmodified opinion.
The clean bill of health.
Yeah. What else should we understand about their role and what their report signifies? That opinion from BSR & Co., LLP, it carries weight, right?
Oh, absolutely. An unmodified opinion from a respected firm provides significant assurance to investors, lenders, regulators, anyone looking at these financials. It signals reliability.
It's not just a box-ticking exercise then.
Definitely not. The auditors also make it clear what management's responsibilities are versus their own.
How so?
They state that the company's management and board of directors are ultimately responsible for preparing the financial statements correctly. That includes choosing the right accounting policies, maintaining adequate records, internal controls.
All the groundwork.
Exactly. The auditor's job is then to conduct the audit according to specific standards on auditing, gather evidence, and form an independent opinion.
And they aim for reasonable assurance, I think the term is.
That's the phrase, yes. It means a high level of assurance and not an absolute guarantee. An audit reduces the risk of material misstatement, but it can't eliminate it entirely.
Understandable. Did they comment on the company's ability to continue operating? The whole going concern idea?
They did. They explicitly stated that, based on their audit, they concluded management's use of the going concern basis of accounting is appropriate.
Meaning they don't see any immediate red flags about Pidilite's survival.
Correct. They didn't identify any material uncertainty that would cast significant doubt on the company's ability to continue as a going concern. That's reassuring.
Definitely. Now, for the consolidated results, with all those international subsidiaries, did the main auditors do all the work themselves?
Not entirely. They mentioned that for certain components included in the consolidated results, specifically subsidiaries, associates, and a joint venture located outside India, they relied on the audit reports issued by other independent auditors.
Is that normal?
Yes, very standard practice for large groups with international operations. The principal auditor relies on the work done by local auditors in those other countries.
Okay. And one last technical point from the audit notes something about the figures for the final quarter, the one ending March 31st, 2025.
Ah, yes. They pointed out that the figures specifically for that last quarter are essentially derived or balancing figures.
How do they calculate them?
They take the audited figures for the full financial year ending March 31st, 2025, and subtract the unaudited figures for the first 9 months of the year, which ended December 31st, 2024. Those 9-month figures would have been published earlier, usually after a limited review, not a full audit.
Got it. So the Q4 numbers aren't directly audited in the same way, but they are derived from the audited full-year results.
Exactly. It's just how the timing and reporting works.
Okay, great. So if we step back and try to summarize, what are the really key takeaways from this whole deep dive into Pidilite's 2025 results?
Well, I think, first off, you see solid, healthy growth in revenue, both for the main Indian company and the wider global group.
Right, the top line looks good.
And that growth seems to be translating into stronger profits, too. Profit before tax is up nicely in both standalone and consolidated views.
Plus that significant dividend recommendation.
Absolutely. Rs 20 per share signals confidence and a willingness to return cash to shareholders. That's often seen positively.
And underpinning all of that is the clean audit opinion.
Crucial point. The unmodified opinion provides that layer of credibility and assurance about the numbers themselves.
We also saw that interesting strategic move.
The NBFC acquisition, yeah.
Yeah.
It wasn't just about the core numbers for the past year. It gives a hint about future strategy, strengthening their ecosystem, supporting partners.
So overall, it feels like a company that's performing well financially, has its house in order according to the auditors, and is also making some forward-looking strategic bets.
I think that's a fair summary. Consistent performance, shareholder returns, clean audit, and a bit of strategic maneuvering for the future. It paints a pretty robust picture as of March 2025.
It really does. It gives you a comprehensive snapshot without getting totally bogged down.
Hopefully, yeah. That's the goal.
So here's something to maybe chew on after listening to all this. Considering Pidilite's strong financials, that consistent dividend, and this move to acquire an NBFC to support their partners, How does this position them within their sector, especially for investors looking maybe more long-term? What does that combination signal about their strategy going forward?
Good question to ponder. Stability plus strategic growth initiatives.
Definitely something to think about. Thanks for tuning into this deep dive.